bird's eye view of the richest property market in Africa. It's been a long way to the top. In over 16 years, Norbert Sasse has climbed it step by step. Born and bred in Johannesburg to a German father and Afrikaans mother, he is one of the founders of the rebirthed Growthpoint, South Africa's largest property company. A chartered accountant by training, he manages the 23rd biggest company on the Johannesburg Stock Exchange. Growthpoint owns 559 buildings spread across South Africa, Australia, and Europe. They are made up of offices, shopping malls, and industrial parks, valued at over 132 billion rand. Today, Norbert sits on top of the property tower. But when he started out in life, it was a different world.
In those days, you still had the army that you had to go to, so 2 years.
So you did your time?
So I delayed. I keep delaying. I said, let me study more, let me qualify, let me do my articles. And it was in the year that I qualified as a CA. They changed from 2 years to 1 year.
Lucky
said,
you.
Let me get in there, let me quickly go and do the 1 year and get it out the way, which I did. And then I went back to Ernst & Young. I knew at the time that I wasn't cut out to be an auditor or an accountant. I was always intrigued by the financial markets, by mergers, listings, stock markets, share prices, that kind of stuff, capital raising. And so I went into a division within Ernst & Young known as the Corporate Advisory Services. So it was starting off in the small beginnings with doing valuations of companies, advising companies on structuring, tax advice, M&A, learning the stock exchange rules. And did that for about 3 or 4 years. And then the international the allure of a little bit of international travel and experience, was strong. So I resigned from Ernst & Young, went to the UK.
This was in what year?
This was in 94 to 96.
All right, exciting time for South Africa.
Exciting. So yeah, I voted in 94, and within about a month or so after that, I was off to the UK. And I initially wasn't going to go for a long period of time. I was maybe going to go for 6 months or something, but I really enjoyed myself, and I was temping in the city of London.
Temping as what at the time?
Temping, doing sort of financial modelling, and for a commodity broking firm in the city of London.
All right.
And then I'd had enough, and I thought, the reality of life is that because the UK, and I guess any international market, has got such a dearth of skill, that I was doing more menial work there than I was when I was in South Africa. So I came back to South Africa, and then I knew I wanted to go into mainstream corporate finance and investment banking with an investment bank. So not with an accounting firm anymore.
So is that how Investec happened?
And that's when I started with Investec.
So I imagine this is round about what we just entered the millennial.
So now we're going into
we're
into 2000, and it was at the end of the 90s, late 90s. There was a lot of market turmoil. And into the early 2000s, you had the dot-com bubble, and you had Y2K and all these things. And the financial markets were actually a little bit quiet. So raising equity for new listings wasn't really an option anymore. So things were a little bit quiet in the corporate finance division, and I started exploring within the bank what opportunities were available within the bank. And at the same time, I was approached by the two Sams who ran Investec Property Group, Sam Hackner and Sam Leon. And they said that we should form a little bit of a collaboration almost between property and corporate finance, and we should target the property sector. They think that the property sector is going to emerge as an asset class, and I started doing a bit more work and research into that, and then found out that in fact Investec had the management rights, owned the management rights of 2 listed property companies, which was Growthpoint Properties and Metboard Properties. And I started doing detailed financial analysis of these two companies, Growthpoint in particular. And unfortunately, it wasn't a good story. Growthpoint was looking pretty sick at the time. Growthpoint was listed in 1987. I don't know what happened to Growthpoint between 87 and 2000 when I sort of started looking at it. But it was, the reality is it was looking a little bit sick. It had too much debt. It had a stepped rate interest rate loan where the interest was increasing by 10% per annum. The assets, it had 9 properties. The total book value of the assets was about 120 million. So I prepared a document for the board, like an internal document, and with a couple of recommendations on what we can do with this company. 2 of them, to be honest with you, was liquidation, because it really was
too sick.
It was too sick. And the third one was what I would call a growth strategy, to approach some clients of the bank who own portfolios of properties who they might wish to dispose of, or they could sort of sell into Growthpoint, and we can start growing, the business out of its sickness, if you want to call it that. And it's at that time that Sam Leon, with the relationship that he had with the Mines Pension Fund, got us into a competitive bidding process to provide a solution for the mine pension funds. So the mine pension funds in those days had, the industry was changing from defined benefit pension funds to defined contribution. And they were sitting with too much direct property on their balance sheet. They needed something more liquid, and they were overweight property in their portfolio. So we provided them with a solution. We said, if you sell all your properties into Growthpoint, a pension fund couldn't take on debt, but Growthpoint as a listed company could take on debt. So we could gear the portfolio, and we could go to the institutional investor market, and we can go and place some of the shares with the likes of Coronation and Old Mutual and Liberty and these kind of guys, and we can give you a big chunk of cash. We gave them, of the 1.5 billion rands worth of assets that they sold us, we gave them about 800 million in cash, and the rest they took in Growthpoint shares. And they became Growthpoint's largest shareholder.
From 9 properties that you inherited from Growthpoint, now it's gone to 550 or so.
Correct.
Take us through that evolution, that growth process, that point where you realized that even South Africa had become too small for you. You cast your net out in other countries. Just take us through that.
I guess the standout one is 2009. Which is now in the midst of the financial crisis, and global financial crisis. Lehman's hit the wall in the UK, and it's chaos in the financial markets. But interestingly enough, South Africa didn't experience a financial crisis. It suffered the consequences of the global financial crisis in as much as we went into recession like everybody else in the world. But we still had liquidity. The banks in South Africa never had to be supported by the government or by the Reserve Bank, whereas the banks all around the world had to be supported by their governments. And as a result, we were able to still have access to liquidity, debt capital and equity capital. And in Australia, unfortunately, they had an almighty collapse, in the property sector in particular. From the peak of the property cycle in 2007 to the trough in 2009, the Australian listed property sector lost 80% of its value. And that created an opportunity. So we were a little bit late to that Eastern European party, to be honest with you. So we had our Australian business, we had a very big South African business, and so we were still pretty happy. And, some of our competitors started investing into Eastern Europe, and I kept being asked by industry analyst, for my views, and the reality is I didn't have a view, so I just said, look, I'm a little bit skeptical about this whole thing, but eventually I said, let me go and have a look for myself, and went there, and I came back very excited, actually, to be honest with you.
At what point did the V&A waterfront come on board?
That was in fact, the first round, the first time the V&A was put up for sale was 2006.
Okay.
And we looked at it very keenly at the time, but it was probably a bit aspirational because it was large and a huge deal relative to the size of what Growthpoint was at the time. We put our best foot forward, but we weren't successful in buying it in 2006. So it went to the foreign buyers, a combination of Dubai World and a company known as London Regional. Fast forward to 2011, and
Right.
the financial crisis was vicious. So even the mighty Dubai world, okay, was in financial trouble. And they decided that they needed to sell this asset they had in South Africa. So we went into a 50-50 partnership arrangement with the PIC.
All right.
And we bought the asset in 2011. And we've continued to invest, obviously, aggressively in the V&A waterfront, with expanding with new offices and the museum and all sorts of new and wonderful things.
Norbert, you mentioned quite a number of difficult times that you navigated through the crisis in 2007, in 2011. Now in 2019, many would say that we are still in a very big crisis. How does the operating environment now, particularly in South Africa, compare to back then? Which was easiest to maneuver?
So when we started in 2001-2, when I got going with GrowthPoint, I'd say that vacancy factors were at or slightly even above where they are today. I mean, the economy wasn't particularly strong. Property wasn't a recognized asset class. But I guess you didn't have the same level of overdevelopment as we currently have. It was a tough market then, but I would have to say that I don't believe that we've ever experienced as tough a market as we currently are experiencing in South Africa. 2019,
if this new dawn materializes, what next for GrowthPoint? Are you continuing with your international strategy? Is there an Africa strategy that will become more dominant in the group's future? What next?
I guess the two major strategies that we're driving at the moment is the internationalization. So I don't think, whatever happens economically in South Africa, and we all hope it's going to be positive, it's not going to happen overnight. There's going to be a slow recovery. Domestically, we are running what we call our fund management strategy, which is a strategy which talks to creating unlisted property funds, targeting institutional investors, but more specialized asset classes. So we don't want to compete with our own balance sheet and buy more retail shopping centers or more offices or more industrial properties into these funds. We want to have diversification and more specialization. Those are the two key strategies. And then, again, opportunistically, there is probably a bit more turmoil in the listed property sector today than there's been in the last 10 years. A couple of the listed property companies' share prices have taken a massive knock. They're trading at big discounts to underlying net asset value. Is there opportunity in that?